Hi everyone, this is a short screencast for Independent Colleges Dublin for F6 Taxation for December 2014, and this particular screencast covers question 4 of the recent mock exam, covering the area of residency, domicile, and indeed ordinary residence. Okay, so just taking down the requirements first, it looks like we have just several definitions really to provide in relation to these 3 key areas, and really part B there deals with his status in each of 4 years. Okay, in terms of the scenario, obviously not an overly long one, but it does provide us with some useful information in relation to George White. We see that he is domiciled in Ireland. He had always worked here, so that must mean that he was resident up until May 2010. That's quite significant. And then he went away to Canada to work for a period of time. And it looks as if his status changed in 2013, and he returned to Ireland on this date. So again, that's a key date, and he certainly hopes to stay indefinitely in Ireland. Okay, so some quite useful information here. Quite a good question on residency. This certainly covers the whole area to a large extent, and covers all of the key points that you need to know walking into the exam. So let me take you through the answer. Really what you'll see is obviously narrative points for marks being scored for a variety of different points. You know, it may well be that you feel that an answer of this kind may be easier done through a list by you in the exam. It may well be easier for the examiner or indeed the marker to score you for each point if the points are stated in a list format. Okay, so in relation to domicile, what we see is really what we expect. There's certainly no statutory definition. It comes from case law, past tax case law, and there's some key points made here that are important in relation to domicile. Certainly, every person will have a domicile. You can't have more than one, and you can certainly change your domicile or indeed lose your domicile by acquiring a new one. So how does it work at the outset? Well, certainly your father or your dad is important. You'll require normally the father's domicile, although they do make the point here. I'm not so sure that we need to make that. I think we could simply say that the domicile is acquired at birth. It's the domicile of birth or indeed origin, and from the individual's father. And certainly that's fixed until age 18, where they do have the opportunity to change it. Their domicile would obviously change if their parent or their father's domicile changed up until the age of 18. Okay. Now, in terms of changing that domicile or having what we would call a domicile of choice after age 18, they can do that really by severing ties with their existing domicile. They need to do some pretty significant things. Certainly, they need to have a physical presence in the other country, an intention to reside there permanently. They'd have to really prove that, perhaps by selling all assets in Ireland, let's say, or moving their children, or perhaps buying a house in a foreign jurisdiction. So those are the key points in relation to domicile. Certainly those key terms like domicile of origin, birth, domicile of choice, those are key things that you need to understand. Do recognize that age limit of 18 for the change of domicile, and also 1 or 2 points above in relation to certainly everyone would have one, and you cannot be domiciled in 2 places. Okay. In terms of residency, fairly straightforward, really 2 rules. The most straightforward one is obviously the 183-day rule, and that simply states that if you're in the state for 183 days or more, then you're resident for tax purposes. Also a nice point to bear in mind there is that if you're present at any time during the day, then that day counts as part of those 183 days. Next point here is in relation to the second rule, sometimes called the look back rule, and it's really this area of sort of 280 days between the current year and indeed the preceding year, where the years are a minimum of 30 days or more in any year, normally the current year. So you'd probably have a situation where, let's say, you have, for argument's sake, 100 days in this current year, therefore more than 30, so that makes that year okay, and a total of more than 280 in total across the 2 years. So you've just got to watch out for the current year being less than 30. Okay. Other point here, which is relevant in this question, is just this possibility of an election to be resident. If it was advantageous to do so, they can satisfy that's their intention, satisfy the revenue, then they could be seen to be resident on that basis. Okay. There is actually one mark for that, which I'm a little bit surprised by. But let's try and remember certainly those two key ones and also this election option. But these would certainly be the more common ones, the 183-day rule and then the look back 280-day rule. Okay, ordinary residence is fairly straightforward to deal with in the sense that, you know, where we have a person who is resident for each of the 3 preceding years, then they're ordinarily resident for the 4th year. Okay, so if you have residency as mentioned above, then in that 4th year, you're ordinarily resident for sure. Okay. Now, in terms of changing that, it works in effect in reverse, because you would have to be non-resident for 3 consecutive years to be no longer considered ordinarily resident in the 4th year. So that's quite easy to remember. Just remember the number 3. So we're talking about 3 years of residency and therefore ordinarily resident in the 4th year, or in the reverse, 3 years of non-residency, obviously consecutive years, to be not ordinarily resident in the 4th year. Okay, so when we apply this situation, this is our part B, you'll see that they've worked in a table. We don't necessarily have to work like this. They've had the obviously the benefit of a lot of planning time for their answer, but they give a sort of little table here. They deal with each of the years. I'd certainly encourage you to do that. And you'll see in relation to, if we just deal with the residency side first for 2010, you'll see that looking at the look back rule based on this individual's circumstances, you know, he certainly would have been resident, because I think he left in late in the year. He would have been there for the whole year of 2009. Therefore, under the look back rule, certainly he's resident. In terms of the ordinary resident status for this individual, he'd certainly been resident for the 3 preceding years. As it said, he'd been resident all the way up to the middle of 2010. Therefore, he will have been ordinarily resident in that year. Okay. Now, in relation to 2011 and 2012, we can see that very clearly he's not present for enough days in either year. Therefore, he cannot be resident. Yeah, he doesn't satisfy the rule. Certainly, the look-back rule is going to be irrelevant too. So, in those 2 years, he is definitely not resident, because he does not satisfy that 183-day rule. Okay. Now, in relation to the ordinary resident side for 2011 and 12, you can see that we have that 3 rule kicking in, where he remains ordinarily resident because of this 3 years of leaving Ireland. Yeah, so he remains while he in effect is non-resident for normal tax purposes. He still is ordinarily resident. Okay, so that covers those 2 years there. In relation to point number 3, he is also, as with 2011-12, still going to be ordinarily resident. He would only become technically ordinarily or not ordinarily resident in the 4th year. Okay, after leaving. Okay, because he will have had 3 years of non-residency. Okay, just a quick note down here in relation to 2013. He's certainly been present for less, but you know, there could be an election made by him, as we said above when we dealt with this issue of the several rules for residency. He could make an election subject to it being advantageous, or indeed tax advantageous, for him to do so. Okay, so that's a quick summary on question 4 on residency, domicile, and ordinary residence. Hopefully that's been helpful, and thanks for listening.